Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is September 27th, and today we have a jam-packed episode for you, as we always seem to have nowadays. So today's episode is going to cover things like the bi-weekly update from the Rocket Pool community. We're going to be talking about the sentiment poll for RPIP 62 closing, some potential update on the team's Twitter account, which is really exciting. On the Ethereum side, we're going to be talking about Ethereum fees these last few days. There's a whole section on TradFi on Ethereum. There's an active discussion taking place on crypto Twitter today and yesterday about scaling Ethereum. We're going to cover all of those things and a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
So first we're going to start here with the bi-weekly update. And last night, on Thursday night US time, there was a community call. Sadly, that call has not gone online yet. So I can't share that link with you, but part of the information that was covered in that call was this bi-weekly update from a couple of days ago. And here we have a protocol update, and this is our reth supply declined by 0.2% to 491,000. This is an annualized decline of 5%. And then we have active mini pool count went down by 2%. And this, of course, was because of 1KX leaving. But this is an annualized decline of 53%, which is quite brutal. It's really brutal. But that I think is just localized number, and hopefully that trend is going to be reversing soon. And then we have node operator count increased, and of course that is a number that just goes up forever. So testing continues on smart node version 2. Saturn contract implementation work continues, and the Houston hotfix audit has been completed. So Langers will be providing additional updates during the next community call on Discord. So that happened yesterday. Sadly, I don't have an update on that for you. With governance, there's further discussion about RPIP 62 and the vote sentiment poll that went up, which we're going to be talking about later. And then we also have a discussion about the hotfix and the sentiment poll, and latest IMC reports are available as well. And with integrations, reth is now supported by LP optimization protocol, and that's TalkMac XYZ, and media marketing. RPL has new listings, but please do your own research first. And there's also a futures listing for RPL as well. And Beefy announced the boosted rewards for the RPL reth pair, and recent community call guests include Archive and Contango. So that is a nice little update from Mav. Thank you for that. And yeah, you can get all that information by following the links that are in there. Okay, let's go to the Discord now, and we can see that sentiment poll for RPIP 62 has officially closed. There were 61 votes, which is actually an incredibly high number of votes for this. And of those, 40, well, basically everyone except one person said that this is either good enough or this is great and it's worth moving to the forum. One person said oppose moving to vote for other reasons, but they didn't clarify what their reason was. As far as I know, that RPIP 63, which is the hotfix, that is being a sentiment poll for that is finishing on Friday. So that will be those both will be going to vote on Sunday night US time, Monday morning Australian time, because I guess Langers has to wake up and get that information out there. But if we have a look in the research thread, maybe it's governance thread. Yeah, in the governance thread here, Langers made a new thread, and he says there's an initial draft of the RPIP 63 vote text, and then that was that looks like it's going to get done. So if you're ready to vote, get ready to vote on Monday. Like I've been saying, I will vote in favor of the Houston 63 hotfix, and I will vote most likely, but it might be subject to change, to vote to start ETH-only validators with removing the cliff. So if you want to override my vote, you're welcome to do that. If you have any questions about the way that I'm intending to vote, please, I'm happy to have a discussion about it, as long as the discussion is in good faith and we're trying to be productive with each other. That I'm more than happy to have those discussions. So please reach out to me on Discord. You can tag me in trading. You can also direct message me if you'd like to keep things private. But at the moment, the way things stand, I will be voting to remove the cliff for RPL on staking, and I will also be voting to enable the ETH-only validators, of course. So that's how I'm planning on voting, but please let me know if you have other ideas. Okay, we got a little update about the Twitter account. So those of you who've been following for a while, you know that the Rocket Pool Twitter account was hacked. The team regained control of that, but then for some reason Twitter locked the team out of the account. I think it was like subject to repeated attacks from scammers or whoever these people were. And what happened was Twitter just locked down the whole thing. And then whenever the team tried to contact them to get the account back, no one ever replied because Twitter is garbage. And it looks like we're finally getting some movement on that. So Lido here shared a sentence. It says, a response regarding the old Twitter account has finally been received and efforts will be made to recover it. So if we have a look actually here, there's last night a team and GMC meeting took place, and this was part of that with the Twitter account, that hopefully the team will be working on getting that back in control. And this was, a couple of weeks ago, there was an update that they might be making an alternate account. So I think that there's work going on both of those fronts. And hopefully we'll have a Twitter account soon. And covering like the rest of this meeting, you can see that there was an update with Patches and the work that he's been doing with the team on behalf of the GMC. And also there is information about the reth growth incubator. So application drafts are now live and feedback is being sought from the GMC, and the merchandise store setup might take another couple of weeks before we have a Rocket Pool merchandise store. So that is all looking really exciting. And let's move on to the forum here, and we've got this post from Jason who's saying Wormhole would like to propose to the Rocket Pool DAO integrating reth with native token transfers through the NTT. Rocket Pool will be able to improve cross-chain experience, unlock additional growth opportunities, and reduce bridge liquidity costs by integrating with NTT. The Rocket Pool DAO will future-proof itself with cross-chain flexibility for reth, gaining access to all current and future networks that the Wormhole connects to. So what is a Wormhole? So they're saying that this is a messaging service passing information through blockchain networks, and they will basically allow bridging of tokens to happen. And then it tells you like what their guardians are, how they want to decentralize things, and then there's like external assessments as well that have like architecture risk and implementation risks, protocol risks, network risks, and then they kind of explain to you how the native token transfer actually works. And then they actually have some interesting information about the reth landscape. So they said like it's currently an Optimism, Arbitrum, Base, and Polygon outside of mainnet. Rocket Pool has previously assessed interoperability providers and ended up deciding on leveraging canonical bridges for L2 deployments. Outside of canonical bridges, Rocket Pool is currently funding liquidity pools for Optimism and Arbitrum. And then they go on to say reth's presence on layer 2s varies, as seen in layer 2 vibe check forum post. Participants in Rocket Pool governance have a divided view of each divided view of value for each chain. Protocols such as Aave and Eigenlayer have created strong demand for reth, and it's expected that with the advent of any asset restaking and new protocols with fresh tokens, reth will have a source of demand. Proliferating reth into ecosystems such as Scroll, Linear, Monad, and any other upcoming chains, in combination with tapping into the aforementioned protocols, will amplify reth's growth in DeFi. So then they have their little thing about like benefiting, what benefits we'll get and what's good about the NTT integration. And they kind of explain how it'll be good for Rocket Pool to put reth across these different chains. And so there's, I guess, they might be asking for some money, or they might be asking for something like this. But I thought that this post was quite interesting, so I thought I'd bring it to your attention. However, there's not been any discussion about this yet, and I'm curious to see, understand why that is. I guess it's a post that hasn't really gained that much traction. I just happened to kind of like stumble across it when I was like reading the forum for other things. But I thought it was interesting. So definitely go and give that a read if you are interested, and ask questions of Jason, and we can find out what what they want and how they want that to happen, because anything that can help our ETH grow, that would be great. Okay, one of the reasons why we went down on the mini pool count, of course, was because 1KX shut down some of their validators on the second node, looking like they're going to wind down the whole the whole node of all these validators. Well, they've actually withdrawn a part of their RPL from that node now, and they've removed 110,668 RPL. That RPL is currently still sitting on their wallet. So it's not moved to Binance yet, but I suspect it will be moved to Binance soon, because this is kind of following the same pattern that they had last time. I don't know why that's not working. Oh, it's Rocket Scan, that's why. Let's just go to Etherscan and have a look there. Sadly, Rocket Scan isn't the website it used to be. Okay, where do I go from here? I think this is the wallet. Let me see. Yes, okay, so this is the 1KX wallet. And if we have a look, you can see that they've had tokens coming in and out. And in recent weeks, they've had, RPL going out to Binance and other tokens as well, but activity. And then here, they had more tokens going to Binance. And now they're getting tokens withdrawn from Rocket Pool. And it looks like that will potentially go to Binance as well. So that's what we're waiting for. It looks like they'll be looking to see if there's any kind of pump or anything, and then they'll probably be selling into that. Okay, as Mav mentioned in the bi-weekly update, we have new treasury reports. I already covered the latest IMC report, but we also now have the latest pDAO report. And here there's some information. It says, Vaka says, if you need an intro on how pDAO treasury works, you can read this post. So it says, this period, the pDAO received 6,493 RPL from inflation. Its balance now is 85,666 RPL. The IMC and GMC were paid 11,000 and 4,500 RPL respectively. It says someone minted RPL before the end of the rewards period, which makes no difference to RPL inflation as calculated daily. So anyone can go to the contract and claim the mint function whenever they want. It's just that won't be distributable until the rewards night, but the contract just will cost you gas. There's nothing you can do with that RPL that you mint. This is in other news, we're experimenting with the new recurrent pDAO payments feature to send the IMC in its next two disbursements. If successful, we'll probably also apply it to the GMC to save some of Langers's time. And it says you can keep up with the pDAO's treasuries with the following spreadsheets. And then I mentioned this in the episode the other day, but Val here then kind of talks about that the payment thing, and he says the eagle-eyed community folks may have noticed that both an IMC bootstrap spend and an IMC recurring spend. Here's the deal. We set up the recurring spend to serve as the disbursement in periods 28 and 29. We had an error in how we set that up. We set it up to pay every 28 days starting yesterday and thought that meant we'd be able to claim starting yesterday. In reality, it means that the first 28 days started counting yesterday. The manual bootstrap spend is the amount that should go to the IMC in period 30. The recurring spend was left in place. So it says this means that 2 months from now, we'll have correctly gotten the summed payments from periods 28, 29, and 30. So he's just letting Vaka know, who's the pDAO treasurer, and Samus know, who's the IMC treasurer. But it looks like that should hopefully get fixed soon. Okay, moving on to Ethfinance for the first time in a while. And there was actually a really big post about Rocket Pool that was posted there from Ad Astra saying the exodus from Rocket Pool continues. The ETH deposit pool has now doubled the ETH that the set limit. So it says there's 40,000 ETH waiting to convert into our ETH due to node operators quitting in droves. It was mostly, of course, because of 1KX quitting. It says, I don't blame them. Only a quarter of the RPL supply remains effective staked, with the rest slowly losing value on propping up early investors. That RPL is earning 12%, but nobody seems to be willing to pick it up and set up a node. Unfortunately, the majority of Rocket Pool node operators would much be better off investing in an LST. I had a similar post a while ago, wondering if the upcoming update overhaul will be enough to revive the project. Any node operators or RPL investors here that still believe? So this was kind of a fuddy take in a little bit of ways, but some of it was true. That, the that is the issue with the deposit pool right now. But we actually got some interesting takes here. So Kev actually responded quite well, and Salix, I have no idea how to pronounce that, I'm sorry. Huarag actually had a really great point, so I'm going to read this out because I really liked it. It says, Rocket Pool is still one of the few projects which embodies the core values of Ethereum. It's permissionless. If you show up with a bond, you can participate as a node operator. It's wild to me that people I do not know let me stake their ETH on their behalf. If I counted at a peak, it was several $100,000 of foreign ETH, which was staked on my nodes. When I told that to my non-crypto people, they were just puzzled and asked why anyone would send me that money, but it's absolutely safe for the LST stakers. Most of it is secured by immutable smart contracts. The RPL token backfired massively when staking wasn't the cool kid anymore, and the narrative shifted from LSTs to LRTs. The speculation around RPL reversed and sent the token to Goblin Town. Nevertheless, none of the LST protocol even comes close to achieving that level of trustlessness to me to put in a larger part of my wealth. And he says, if you follow the governance and future plans, it's a bit inspiring to see how cypherpunk values steer the roadmap. This makes them very slow, but that is the price you pay for this. In the coming months, there are two things which can bring Rocket Pool back to track. It's less than a couple of months. It's really exciting. It says the first is the launch and expansion of NodeSet, which is a soft permission layer on top of Rocket Pool and allows for the much smaller bonds and removes the need for RPL for node operators. NodeSet LST users will provide part of the bond and RPL, and also provided by external stakers. They will use ETH from the deposit pool, which helps our ETH holders because a larger fraction is staked. This perfectly shows the value of permissionless based protocol, one that can be built on value on top. You cannot build NodeSet on any other LST protocols. Actually, you can, but that's okay. And then the second is the development of non-RPL nodes. It totally removes the need for RPL for node operators, but they can have it if they want higher rewards. This is obvious response to node operators leaving Rocket Pool and the competition from Lido. This is a multi-stage process and nothing is 100% set in stone at the moment, but the coming months will fundamentally change the bond requirements while preserving the core values. Huara goes on to say, I'm unbelievably excited for these changes to be implemented and go live. I would not put my life savings into Rocket Pool because of this, but I think the Rocket Pool protocol will come out much stronger, which in turn makes Ethereum more resilient. So there was some really good points here from Huarag, and these are the things that I'm excited for as well, right? Like I'm excited for NodeSet, which we could have in less than a month. I'm excited for ETH-only validators, which we could also have in a month. So this is actually a really awesome timing for the community to, start firing on all these cylinders. And I think that really good things are going to come from here. The discussion, of course, went on a lot more. Like I said, this was one of the biggest discussions around Rocket Pool that I've seen on Ethfinance in a while. Some of the comments were a little bit fuddy, but some of them were constructive. I think there were a lot of Rocket Pool community members who were coming and sharing information. And even Ad Astra said that, if we get the ETH-only validators back, then they'll start bringing their ETH that they took out of Rocket Pool back into Rocket Pool. So I think there's some interesting ideas that were kind of being shared here, and I'm really curious to see what the impact of ETH-only validators will have. I think there are a whole lot of people who like Rocket Pool, the idea, love Rocket Pool, the protocol. They just hate RPL, the token, and they really do want to stake with Rocket Pool and get those outsized returns, but they don't want anything to do with RPL anymore. And I'm really curious to see what number of people that is, and whether or not they will actually come back to Rocket Pool when the time is there. So that's going to be very interesting to see. Okay, next we have news of a client update, and this one is from Geth. And here Peter says that this is the Coppice version 1.14.10, and this is a hotfix release to fix a blob pool regression introduced in 1.14.9. So users running the previous bad version should update ASAP. That said, there's no immediate danger to these users, just the health of blob transaction propagation and inclusion in the network. And then besides the hotfix, there are a couple of other things as well. So if you are on 1.14.9, then upgrade to this version. And if you are on the older version and you want to upgrade, you're welcome to do that as well. So, yeah. Okay, moving on to some staking news now, and we've got some news out of the Lido ecosystem, and this is Demi, of course, who you saw on the episode of Launchpad with me, who's the lead of the CSM project in the Lido ecosystem. Here, Demi's asking the Lido community about what they want to do with CSM. So he's saying that min is closer than you anticipate. One of the important variables to be set upon CSM contracts deployment is max keys per operator. It says this CSM uses this immutable variable to determine the maximal number of validators operated by a single node operator in CSM during the early adoption period. So initially this was set to 12. However, there's some discussion about increasing this and setting it to 25 in order that it'll be as close to possible as 32 ETH, which is 32.7 ETH. So kind of giving their reason says that it's crucial to note that from Lido CS contributors' perspective, it's not designed to incentivize vanilla validators migration, since they're the most important backbone of Ethereum decentralization. At the same time, Ethereum validation is and should always be permissionless. Hence, it's up to the stakers to decide on the methods of validation that best fit them. And they said we encourage community members to vote for the preferred option to ensure community alignment and reasonable choice of the max signing keys per operator per parameter value. And then here there is the vote that's happened. So 123 people voted. There's 4 minutes left. And it looks like the vote is split 60-40. However, Demi said that if the vote is kind of close, then they'll take it to the forum and try to discuss it out there and have another vote there. I don't know if 60-40, well, 58-42 is close enough for that to happen. But we might get some information about that. So, yeah, that's an interesting discussion that's taking place, and I think that we will know what Lido's looking like with their CSM in a few days' time, and I'll let you all know what that's looking like as well. Okay, moving on to some Ethereum news now, and there was something actually really interesting that's happening on the Ethereum news, and that was that fees are back on Ethereum. So that period of sub 1 GUI gas fees is maybe over for now, at least, if not forever, hopefully. But Figo here says last few days the L1 fees did a nice 20 to 50x, while crypto Twitter called the apocalypse on ETH for weeks, currently sitting at 44 GUI. Honestly, I think it's just a blip on what will come if we see a real craze again. Rest in peace to all those proclaiming ETH has a value capture problem. So let's have a look at ultrasound money and look what the 7-day chart looks like. So on the 7 days, ETH is still inflationary. However, it is inflationary by much less than it was inflationary by before. So in the last 7 days, there's been around 18,400 ETH that has been issued, and of that, 13,200 has been burned. So that's around 66% of all ETH issued is being burned, actually over that amount, which is really, really awesome to see. And hopefully we'll get back above the ultrasound territory, so ETH overall can be deflationary again. But if we have a look at the deflationary barrier, that is at 24.2 GUI. The average for the last 7 days has been 17.4 GUI. The max gas has been 112 GUI, and the minimum has been 4. So I'm curious to see what it's going to look like this weekend. And because in weekends over the last few months, gas would go below 1 GUI per transaction, and now it's at 4 GUI in last weekend. So I'm curious to see what it looked like this weekend. But you can see that the gas has been painting these higher lows in this last week, like on the left side of the chart. If you look at the 30-day time frame, gas routinely would go below 1 GUI, and that wasn't even just on the weekends, even on weekday nights. But since then, gas has definitely putting in higher lows and higher highs as well. So it's in a bit of an uptrend now, to use a little bit of technical analysis parlance. But that is encouraging. It's strongly encouraging. So I'm going to keep my eye on that and see how it goes. But yeah. Okay, moving on to the section that I'm calling TradFi on Ethereum, because before I'd break the story down by each one, but there's just too much stuff happening for me to break it down one at a time. So the first piece of news here is from CoinDesk saying a unit of financial services giant Guggenheim Partners issued 20 million of digital commercial paper on Ethereum with the aid of a blockchain platform, Zeconomy Inc., as Wall Street takes to tokenizing real world assets. So here, Guggenheim Partners is a huge company, and they are now moving on to doing stuff on Ethereum, which is absolutely amazing to see, and more real world assets coming onto Ethereum. Then we have Athena here. Athena, you probably know about, from their stable coin that they have. Well, they're saying that we're excited to announce Athena's newest product offering, USTB. So these are treasury bills. So USTB will be fully backed by BlackRock's BUIDL, in partnership with Securitize, enabling a separate fiat stablecoin product alongside USDE, and details below on why this is important. So here they go on to say that USTB will be collateralized by BlackRock and Securitize BUIDL, and will functionally identical to a traditional stablecoin. This will exist as an isolated product separate from USDE, offering users and exchange partners a new product with a differentiated risk profile to USDE. Then they say one initial concern surrounding it is community has been how the protocol responds to negative funding rate environments, and despite bearish conditions over the last 6 months, Athena's SUSDE has not endured a single week of negative funding. And nevertheless, if required, USDE backing composition can dynamically adjust between basis positions and liquid stable products in different interest rate environments, and USDE can benefit from incorporating USTB during periods of weak funding conditions. So here there's a lot more information if you want to have a look at it, but they're building with BlackRock. And then here Wolf of All Streets talks about this as well. So this is their synthetic dollar, and this is their second stable coin, and they're building with BlackRock. So yeah, it's pretty cool. A few weeks ago, I talked to you about how Revolut is thinking of making a stablecoin on Ethereum. Well, now we have news of Robinhood launching stablecoins on Ethereum as well. And this is Ethereum. The Ethereum vibe in here says that this is Ethereum accelerationism underway and how it's getting faster. And here, this is news from Tree News saying that Robinhood and Revolut set to explore launching own stablecoins, and that will be on Ethereum, of course. And then this whole the Amin here has news of saying that PayPal to enable US business accounts to buy, hold, and sell ETH. So this is actually really great news as well. And we are seeing that more and more TradFi companies are getting more and more integrated into Ethereum, and it's in some cases happening quite quickly, in some cases happening slowly. But I think even in the cases where it's happening kind of slowly, those are going to accelerate really fast. And then Amin has a take on this, says, I predict that eventually the entire global financial system will be on Ethereum. In such a scenario, envision 3 major asset types. One will be ETH. As Ethereum native currency, ETH would be integral to every transaction and contract, making it the asset with the largest market capitalization among on-chain primitives. It would serve as one of the 2 principal stores of value in the global financial system alongside the USD. And this is ETH-derived stablecoins would use algorithmic processes encoded in autonomous protocols to peg their value to USD, with ETH as their collateral. And then USD-backed stablecoins would rely on external USD reserves for backing, representing the largest tokenized external asset on Ethereum. It says, in addition to these, we'd love to have minor on-chain primitives and minor tokenized external assets. And you can look at this diagram to see what it might look like. So this is, definitely bullish projection on, what Amin wants Ethereum to look like. But the signs are there that the start of that is happening, and we're starting to see that right now. So that's awesome. Okay, so there was a whole bunch of crypto drama in the last 24 or so hours here, and it started yesterday with POTUS. Not POTUS didn't start the drama, but sharing what happened in the All Core Devs call, saying, today I sat in the All Core Devs call in which increasing the block target for Electra 1 was discussed. I want to post on 2 topics of Ethereum governance that transpired during the call. Firstly, I'm all into increasing the count to the maximum that is proven to be safe. says, I've already noticed that division of opinions seem mostly along the lines of client devs and researchers. I don't think this was a coincidence. We need more client devs involved in basic research, and we need more researchers learning how our caches work and break. So the second point is about speaking up. Today, Vitalik Buterin showed up supporting the increase. He's rarely wrong on anything. So as such, I understand that no one would want to contradict him or be on the other side of the discussion. There were some core devs that raised concerns, some that genuinely didn't have a position either way. But what I don't find as acceptable is those that did have a position and did not voice it up in either way. He said, I received numerous DMs after the call from people that are somewhat related with home stakers one way or another. I even received DMs about this issue before the call happened. It's unacceptable to have backdoor conversations on issues that are transparent. We are all on the same team trying to find the best parameters that fit everyone involved. Ethereum is one of the most welcoming places in that if you have an opinion, it's not only heard but valued and taken into account. If you never voice it up, you will never be heard. This is particularly dangerous when there's economic incentives. People that have them may not care about voicing theirs. And then he says, to end this thread, I believe blob count limit is not a matter of opinion, so most of what I wrote above does not directly apply. Either clients can handle long reorg syncs with high targets or they can't, but on most decisions we need people to speak up. So POTUS kind of like put out this message, like I said, like it was kind of divided. I guess the all core devs call was kind of heated. And then here Ben Edgington comes out and like kind of shared his perspective, and this was early morning Eastern time on the 27th, saying, okay, voicing my concerns publicly. He says, I run a home staking rig that does not use MEV boost, somewhat purist idealist. I know, but that matters to me. He says, I have a junky UK standard ADSL with 12 Mbps megabytes per second megabits per second upload. Nothing better is currently available to me. So he says the only block I've had orphaned in the last almost 4 years since the NEB. Coincidence maybe, but it's clear that a slow upload of blobs does substantially increase the risk of blocks being orphaned. This is the problem is that I'm not compensated for the risk of including blobs in my block. Blob fees, even when non-zero, are all burned, and there's a tip on the transaction. But if it does not relate to the number of blobs in that transaction, so it says that dilemma: include blobs and risk being censored by the network for lateness, or censor blobs and get at least layer 1 transactions on chain. He says, I also work for an L2, so this is added complication, not speaking for them here. So basically, Ben is saying that, he's a node operator, he runs his validators from home, and he's struggling to keep up with the network as it is because of the internet connection provided to him. Max Resnick, who you might remember from a few weeks ago being at the center of some drama as well, came out and said bandwidth capacity grows at 50% a year, asking the global network to slow down while we're actively battling for market share with extremely competent opponent because you live in a swamp with 12 megabits per second. Bandwidth is extremely selfish. So he was quoting Ben, and Ben says, when did I ask for the entire network to slow down? And Max says, you're literally saying that your node cannot keep up, so you want to propose fewer blobs in your blocks. Why don't you shut your node down and unstake? You're slowing the network down by doing this. So that was, quite a strong take. And Ben says, I dislike your dystopian future, which then stirred up other comments. And Max said, we can no longer afford to eat the cost of these luxury beliefs. Solo staking is a place where if you do not have appropriate bandwidth, it imposes an externality on the network. If Ethereum doesn't win, the world looks much more dystopian than a world where Ethereum sacrifices a few rural solo stakers in exchange for a vastly increased performance. Nixo then came in and said that a centralized Ethereum is more dystopian than no Ethereum at all. And then Nixo had some more points as well, saying mercenary types for framing values of decentralization as luxury beliefs in favor of scaling for narrative points is what ultimately kills the value of the chain. I don't think they even know. This view is so short term. Same feeling as optimizing for quarter over quarter profit. And then we actually got a really nice take here from Anthony Sassano, and Sassal said, my thoughts and views on the scaling of Ethereum. He said, I strongly believe that over the next few years, it's critical for Ethereum to keep scaling while preserving decentralization, credible neutrality, censorship resistance, and all the other things that make Ethereum unique. This should be Ethereum's North Star. He says, This means scaling blobs in order to service L2s and also scaling L1s as much as we can while preserving the properties I mentioned above. Or, on contrary to what you might believe, L1 scaling has always been on the roadmap. And he says now there's a consequence here that in some consensus participants, mostly solo stakers, they will be affected in order to scale up blobs. I'm a solo staking maxi, so I believe it's only prudent to scale Ethereum while also preserving solo stakers. But one thing we do need as a community is define what a minimum viable setup looks like for solo stakers. Is currently the rough consensus on what the MVS looks like is low-powered hardware, for example, Raspberry Pi or a low-spec NUC, and basic internet connection with 50 megabits per second down and 10 megabits per second up. And he says the main constraint at this point for solo stakers seems to be the internet connection they have access to rather than the hardware. So in this case, in my opinion, the MVS needs to be defined as the bandwidth level, particularly upload speeds should be the minimum should be 10 megabits per second, 50 megabits per second more. And we need to answer this question as a community so we don't set unrealistic expectations. And then he goes on to say, of course, we also work to preserve solo stakers while scaling blobs by lowering overall network bandwidth requirements, usage with improvements in clients, implementation novel scaling mechanisms like pDAO instead of just brute force scaling via blob count increases, implementing other improvements such as max EB, plus many other things that are at the protocol level. Is Anyway, a lot of research and discussion has just gone into all of this, with more happening all of the time. But I want to give my high-level view and see what other people think. So let's keep scaling Ethereum while making sure we preserve what makes it special, unique, and reliable as a network. So this discussion is still ongoing. There's a whole lot of people still adding their points to this. So let me know in the comments what you think about this. Like, what should we do about scaling Ethereum? Should we push on and not worry if some people get dropped off, or should we try to bring along as many people as possible for as long as possible, even though that could potentially, if you agree with that framing, lead to Ethereum falling behind a little bit compared to other networks. Okay, let's talk about layer 2s now, which is a much more positive environment to speak about. So here Leon says Ethereum L2s are exploding. Base had 129 million transactions, which is plus 500% year on year. Tyco had 60 million transactions, that's plus 200% in 3 months. And Immutable had plus 520% transactions in 3 months. So the activity on these networks is absolutely going through the roof. And if you have a look at Grow the Pie, this chart from Grow the Pie just shows you how much Ethereum has been growing over the past 2 years and 2.5 years even, and the activity is literally just like zooming up to the right, and the transaction counts are just going through the roof. Of course, transaction counts as a metric is not the best metric. We all know that it's gameable, especially when gas fees are really, really cheap, but the activity is looking extremely strong, and that is really exciting to see for sure. If we have a look at L2B, we can see that here there's other metrics where Ethereum is performing extremely strongly. And one of those is that we are hitting all-time highs in terms of value locked on Ethereum. And this is in ETH terms, not USD terms. Of course, the USD price going up means the TVL goes up in USD terms. But if we have a look at ETH terms, there's 14.53 million ETH that is now on layer 2s, and this is up 102% in the last 1 year, which is absolutely phenomenal, huge growth. If we have a look at the max chart, it's looking like it's on the verge of going parabolic, which is really, really cool to see. And activity as well here, if we look at roll-ups only, we see that we're scaling at factor of 10 times mainnet, with recent spikes going up to 11 times, and that number looks to be going up as well. So this is really encouraging. Layer 2s are performing extremely strongly right now, and I'm here for it. Here, Josh Stark says an Ethereum narrative, the highest quality block space for the lowest possible price. So here you can see there's a screenshot of all the different L2s, or not all of them, but lots of different L2s, and the fees that they're paying and what kind of transactions per second they're doing. So here you can look at, some of them are paying 1/5 of a cent, 1/3 of a cent, 1/2 a cent, and even the most expensive ones here, like ZK Sync Era, is paying less than 2 cents per transaction, which is absolutely amazing. And the number of transactions some of these are doing are really good as well. Base is doing 56 transactions per second. Arbitrum is doing 25 transactions per second. So some of these, L2s are already doing more than Ethereum on their own. When you add up all of them, they're just doing really, really good stuff. But this, is just a snapshot. And I think as more activity comes on chain, more of that was coming to mainnet, which what we're seeing with the gas fees increasing. And I think we can see more and more of that going onto layer 2s as well. So that's really, really awesome to see. Okay, next we have this POAP from Fizz. Fizz is saying that I developed a POAP to show appreciation for Danny Ryan for his monumental contributions to Ethereum since 2017. Fizz says the POAP claim uses a new method called airship that can be claimed without connecting your wallet to an interface. So that's actually a really nice method of claiming your POAP. This is what the POAP looks like. It's Danny with a cat, and there's a sunset that Danny's kind of grayed out against, silhouetted against, and it looks like really cool, like 80s futuristic style, retro futurism style. So the POAP costs 0.001 ETH, which is around $2.70, and 100 of these have been minted so far, which is really cool. So the way that you do it is you send 0.001 ETH to this address here. I'm not sure whose address that is. Wait, let me see if it says here. Wish him the best. Yeah, so that money will actually be going to the protocol guild. So that's the address for the protocol guild. And you just copy that and you send the ETH to that in your wallet. So there's no need for you to interact with the POAP website at all or anything like that. And then you'll get the POAP. So, here I minted the POAP. So you can see my name, Whack Whack Attack there is like here, minted 22 hours ago. So you can see that I minted that POAP. So I now have 320 POAPs. That's pretty cool. Okay, moving on to some other news now, and we have some news from the political environment, and this is from Adam Cochran, who is quite strongly like a Democrat on Twitter, and in crypto Twitter, he's definitely a minority, being a vocal Democrat. But he says from Harris's latest speech today, she says that the US should become dominant in blockchain. I'm sure the silence isn't good. It isn't enough. Digital assets isn't enough. Crowd will move the goalposts again. But this is progress. So here in the speech, she's talking about different ways in which the US government needs to be dominant, including AI, and she mentions blockchain as well. So this is actually 3 times in a week that Harris has mentioned crypto. Well, not crypto directly, but digital assets and blockchain, but using the language of digital assets and blockchain and not crypto or Bitcoin, Ethereum, anything like that. But this is after never having commented on crypto ever before. So it is a positive step in that sense. However, a lot of people are suspicious of the how genuine the campaign for the Democrats is by mentioning crypto in this sense, especially when there's still Wells notices and lawsuits against crypto companies and cases happening. Okay, we had a small setback, but kind of not really, with Roman Storm's case. And Roman Storm, for those of you who don't know, is the Tornado Cash developer who was arrested in the US. And here there's news yesterday saying motions to dismiss the case against Tornado Cash were just denied. The US government's unjust case against Roman Storm is set to proceed. Its outcome will have massive implications for the crypto industry, open source developers, and internet freedom. And here Jake Cheminsky, who's a lawyer, has a take saying, if you think it's only a crypto problem that the government wants to hold software developers liable for third-party abuse of their code, think again. Today it's Tornado Cash, tomorrow it's AI models, and whatever else challenges state power. It says build an AI agent, it gets used by bad guys, you go to jail. He says, it's shocking to me that almost none of the crypto civil rights groups have engaged here. Crypto is on the front lines of the battle for free speech, financial privacy, and due process in the USA. But the groups that you'd expect to show up and fight are nowhere to be found. He said, I'm not about to give you the first they came for poem, but if you care about individual rights and civil liberties at all, the precedent being set here in the Department of Justice prosecution of Roman Storms should radicalize you. This is slippery slope that we're sliding down fast. Pay attention. So yeah, there's some really strong takes here from Jake. And then finishing the episode today with this news out of China, that there's been huge economic stimulus that's taking place there. There's monetary stuff happening, fiscal stuff happening, a lot of money printing going on. And the markets in China have responded incredibly strongly to that. So China's stock market has gone parabolic this week after the government announces $140 billion stimulus and multiple rate cuts. I think the total package is about $500 billion. So this is the biggest weekly gain in the Chinese stock market since 2008. And this is actually starting to show in crypto prices now. So if we have a look at RPL, of course, which is the token that I talk about the most here because it's a Rocket Pool podcast. You'll see that on the in the last few days, the token kind of bottomed at $8.80 or so, $8.84, and since then it has gone up like more than 30% to $12.14 today, showing an increase of around 5%. Ethereum as well, of course, has gone above $2,700, and that is, getting to the point where we were kind of denied a couple of weeks ago, 2,800, about 2,820. So need to get through that point in order to move up. But crypto markets are looking quite strong right now, and I think part of that is definitely based on the Chinese information. Of course, more liquidity is coming into the market with money printing happening in, global M2 supplies going up in different countries, and it's only a matter of time before the US starts quantitative easing as well. We might see that as early as November, maybe December, but definitely next year we'll see quantitative easing happening in the US. And all of those things together paint a very good picture. So yeah, it looks like it's going to be an exciting time for crypto. Anyway, thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you have a lovely weekend ahead, and this week was a good one for you. And I will see you all on Monday. Bye.